Eric.
Thank you, Stephen. Asian markets already feeling the impact of the United States' first ever credit rating downgrade, nosediving overnight, adding to fears that a global sell-off will extend here later on this morning. Joining us now with analysis is Tom Belesis, founder and CEO of John Thomas Financial. Thanks for joining us and getting up early. You watched it. You watched Asia take a 2% sell-off, then you watched Europe kind of buoyant. What does that mean for us? Does that mean we're coming back in America?
I think you're going to have an initial, down day in the market, but overall, I think the market's going to brush it off because let's look at the credibility here with the S&P. I mean, this is the same rating agency that rated the toxic subprime junk AAA. On top of their estimated $2 trillion error in their calculation for the 10-year projection on the deficit, which they just brushed aside. So I don't think it warrants too much concern for investors. I believe they have to focus on earnings, and corporate America is doing very well.
Tom, I'm watching the futures right now trade down 215 points. So we're at 300 points in the middle of the night. Any way you slice it, this downgrade can't be good for America, and the American economy is struggling to get back on its feet.
You're right, Eric. No one likes a downgrade, and the markets are reacting to what's happening globally. But if you look at corporate America, they're sitting on a colossal $2 trillion in cash. $1.4 trillion in the top S&P 500 companies alone, and cash is still accumulating at a record pace. Now, if we had a business-friendly administration, we would see that cash pour into the market. Unfortunately, we don't. But overall, earnings have been revised up both 2011, 2012, and we just had a record S&P 500 earnings quarterly release. So I think overall, if you focus on the companies with great earnings, markets do very well.
So companies are doing just fine. They're keeping their money, but still, we still have 9.1% unemployment, and a downgrade like this certainly doesn't tell companies, hey, everything's going to look good going forward, so start hiring people.
You're right, Eric. I mean, obviously, corporate America is doing well. Unfortunately, Main Street America is not doing well, and it's because of what you just said, unemployment. And I think it's because Washington, this administration, let me correct that, has become an enemy of business. And once this administration obviously gets pro-business, I think you're going to start seeing companies hire with the unemployment rate start going lower.
Tom, while we're speaking, the Dow just dropped another 20 points, so 235 points on the downside. Talk to us about another S&P downgrade. They put us on a credit watch for another downgrade. What does that mean?
I mean, I think they're really trying to protect themselves because of the mistakes they've made in the past. I mean, if you go back and look what happened in Japan, the S&P downgraded Japan. There was no effect on the economy nor on the interest rates, and the markets did go up eventually over time. So I think investors should be concerned with what's happening with corporate America, and I think corporate America is doing very well.
I just have to keep pointing this out. I'm watching this thing, 260 now. We started this interview at 215 lower. We've lost 45 points in the matter of 3 minutes or so. This is not looking good, my friend. Very good to bring you in this morning.
Eric,
thanks for getting up early with us.
Thanks,
Tom Belesis. All right. Wall Street set to open in 47 minutes. So how will investors react to the S&P downgrade, and what does this mean for your money? We've got a panel of business experts. Matt McCall, president of Penn Financial Group. Tom Belesis, founder and CEO of John Thomas Financial, is back with us. And Dennis Neal, Fox Business correspondent. Matty, I'm going to start with you down in the end. What do you think is going to happen here? I'm looking at the Dow Jones right now. The futures look like they're pointing to about a 240-point down. Where do you go from there? Is there more downside? Should investors be worried about this?
I mean, I don't think you should be maybe worried, but not panic. There's a fine line between it. I think we probably see a little bit more weakness early on, but I truly believe in the first couple hours of trading, we're going to see a buying wave come in because people are going to see bargains and a lot of stocks that have been beaten down 20% from the high for no apparent reason in my mind. So we'll see some buying, but I think you scale in throughout this week on weakness. You don't jump in everything today, but you start buying this week without a doubt.
Tom, let's talk about the individual portfolio. People out there are going, oh my gosh, what am I going to do? My 401k took a hit. It was coming back. What should an investor do? Or a 401k owner do?
The one thing they should definitely not do is panic and overreact to what's happening with the downgrade. I mean, let's get this straight. The U.S. will always be the safest place to invest your monies. Granted, listen, we're going through some tough times, but we've been here before. The last 3 sell-offs that we've had like this, similar, in a bull market that ended after World War II was 1975, 99, 98, and after those corrections, the market has rallied 18%. So valuations are very attractive now. Now, when the market settles in, I think people should pick their spots and go in.
Dennis, those two guys have pocket squares and they have handkerchiefs. That means they got a lot of money. Yeah. What about the guy who's just looking to maybe get by? What about the guy who wants to buy a house? Is this bad news or good news?
Well, I came here this morning to sell the hope because, a lot of cable news is all what a crisis it can be. But let's just look at a couple things. 9 countries in the last 10 or 20 years got downgraded in their debt, and overall interest rates went down, not up. That's our big fear, is that interest rates everywhere across the economy are going to go up because of this. That's one thought. Also, look at Canada. Pound for pound, Canada is a stronger economy economy today than the U.S. is, and yet they went through a downgrade somewhere around the early 90s or something. That was a wake-up call. They got their act together. What if we were to get our act together? Also note, Goldman Sachs, a bearish call today. They're out this morning saying, we thought the S&P was going to hit 1450 by year end. Now it's only going to hit 1400. Right. That's 20% growth almost.
What about
between
small
now and
businesses,
year end?
guys? What, Maddie, are small businesses, is this a headwind to new hiring?
Absolutely, because what happened is it's taking away confidence. We don't have confidence in the government. It's not about the downgrade. Our confidence was lacking coming into this. And I think the biggest issue I have right now, not the downgrade, but the way that Washington reacted. Washington came out and said, oh, what do you mean? We didn't do anything wrong. And they're not actually agreeing with it.
Stay on the small business, Tom. What about it? Can you hire if you're a small business?
Well, it's a difficult time now because new business creation is at the lowest level since 1983, and we've added 75 million people. So, you know, new businesses right now are facing a tough time because of this administration. But we have to remember the fact that corporations are sitting on $2 trillion in cash. This is not like 2008.
All right. That's right. And there's $7 trillion around the world.
$7 trillion, sitting on a lot of money. Guys, we got to leave it there. We're going to keep our eye on the stock market, down about 242 right now. More Fox and Friends, 2 minutes away.